Good evening, everyone. So, welcome back to another edition of our weekly wrap up and week outlook going forward. What I want to start with today, because we are basically at the end of the month and at the end of the first month of the last quarter, what I would like to do is an overall review of where the market stands, what the different sectors are doing, and that is going to give us a really nice picture as to making hypotheses and possibly drawing some conclusions as to what we need to do going forward. So just a quick look at the futures that opened at 6 p.m. just an hour and a half ago. You can see we closed at around we closed at around 30.20 on Friday evening. We started with a gap up to try to test the top side of this range at 30.2650, and we are basically just bouncing around within that tight range. And so no real fireworks to the upside or downside just yet. We will see what will happen as the night progress into tomorrow morning. So let's get to those sector spiders. So, for those of you who may be brand new to investing or trading for that matter, the stock market is made up of individual sectors. So, just like you have sectors in the economy, you have energy, you have industrials, you have technology, you have communications, you have a number of different sectors that make up an economy. The stock market mirrors that. And so often, to get an idea as to what's going on in the overall economy, it is important for us to unpack and look at the big picture from its constituents. So the constituents that we're gonna address tonight are technology, which is the XLK, financials XLF, communications XLC, consumer discretionary, which is the XLY, consumer staples, which is the XLP, energy, which is the XLE, healthcare, which is XLV, industrials, which are XLI, utilities, which are XLU, materials, which is XLB, and real estate, which is XLRE. So when it comes to the S&P 500 in particular, and of course we're talking about the US markets when we're talking about the S&P 500, these are the broad based sectors into which you can sift and divide or categorize all the different stocks within that S&P 500 sector. And each one of these is known as an ETF, which is simply a basket of stocks put into one vehicle that allows you to have ownership in all the smaller companies that are going into this particular industry. So what I have it here is the industry sorted by, at this moment, year to date. So year to date, the indices are in this ETF group in particular are up on average around 20%, because you can see technology is up 33.79, XLF is up 20.24 for the year, communications 21.9, consumer staples 20.3, so on and so forth. So the S&P 500, despite what you may be seeing on the news headlines from time to time, is in pretty good shape. We shall just jump back over to the chart of the ES, and I'll go out to a weekly chart and show you some wider context. Now, the reason why we had such a marvelous year is essentially in October last year, we had a big decline going into year's end. So we ended 2018 on a very sour note, falling all the way from 2880, which was an all-time high at that point, down to around 2500. And so all we've essentially done is bounce around for the last 2.5 years or so, bounce around between these established levels. As you can see, I have a volume profile study on, and this red line indicates where the most volume has been traded according to price and time. So right in the middle here at around 2800 is where most of the volume is traded, and that makes perfect sense because we have been essentially for the last 2.5 years trading within this range. And so coming from all the way at the bottom here at around 20, what was that, around 2315, ending the year, all we simply did was bounce right back to the very top of the range. And so if you looked at the stock market performance last year, whereas the indices ended on a very sour note, in fact, all we did this year was regain all of those gains from last year, and we have not really progressed much further. And so the key question to be asked is, where do we go from here? We are once again at all-time highs, and in fact, we are in a very large, what we call megaphone pattern or a broadening formation, because we have higher highs occurring at the very top of the channel, and we also have lower lows occurring at the bottom of the channel. And so what we can expect at this point is, obviously, because we're just so close to this all-time high here once more at 3029, it is fairly predictable that we're going to try to attempt to touch and break out of that level within the next week, possibly within the next day or so, because we're so close. And so as a psychologically important level, traders are usually going to bid the market up to see whether we find sellers at that level or we build value at that level, prices are accepted at that higher level, and then we can continue to uptrend and break out and continue to all-time highs. So let's dig into those individual sectors and see what's going on. So again, this is a 3-year weekly chart. As you can see, financials have had a really nice year, but again, where did they start the year? They started the year at the bottom of this most recent range. And so starting the year at the bottom of the most recent range, all they have managed to do, along with the wider market, is seek to retest its former all-time highs of the most recent trading range. And so we've seen continued strength in financials in the last couple of weeks, but we are now approaching a possible area of resistance. Let's keep a look on to see if we see signs of weakness developing in this particular recent market leader for signs of what may happen before. If we continue to see strength in the financials, that could be a positive sign for the market going into year end. Let's take an XLK, the technology ETF. Again, where is XLK coming from? Starting at the very bottom of its range in 2019, and it has literally gone all the way back to the top of the range to make an all-time closing high on Friday at 83.02. So XLK has shown really nice relative strength, and in the event of a healthy pullback on some perhaps geopolitical headline, XLK, because of its relative strength, may be an area to look under the hood for opportunities to go long where it provides asymmetric risk to reward to do so. Of course, Apple is a big component of the XLK, and they report very soon. So this recent strength in the XLK could actually be, just pop over to Apple, could actually be anticipation of Apple's earnings. As you can see, Apple had a nice little descending trend line, which it recently broke out of and has not looked back since. It has completely run into earnings that are going to be taking place early next week. I have no opinion on it in terms of what they are going to probably produce in their numbers. But at this stage, we are at all-time highs. And so my investing philosophy says that you sell into strength. So if I were in Apple at this point, I would be trimming some into that earnings number because as we know, markets discount information. The market is forward looking. And so this may very well be a sell the news opportunity. As people are anticipating good numbers from Apple, they are bidding the stock up. And when that information does get released to the wider market, it is then going to be discounted and there can be a possible sell off. Even to retest these former highs here at around 230 would be a nice opportunity to look to see how the market reacts at that point. So let's take a look at XLC. Again, story of the market this year coming from a very deep sell off. And so all it did was recover to near all time highs. But now we have a bit of supply developing at the top of the range. And so this is one to keep an eye on for possible short opportunities depending on how select names report in this current earnings season. One important thing to note is that we have been we why the market has been so difficult to trade perhaps in the last quarter is because we're seeing some mixed signals. Usually, when you have a sector such as utilities, which is by and large a defensive sector, outperforming, that usually is not a bullish sign. And by bullish, I mean is not a sign that you want to see when you're expecting the continued appreciation of investment securities or investment vehicles or trading assets. But utilities have been outperforming for quite some time now. And so now we see this very steep angle of ascent in utilities coming back into possibly forming what we call an ascending wedge formation. And so I would be looking keenly for signs from the XLU and its constituents to see whether this group might possibly be stalling out. We have a high here at 65.11, and so I'll be looking at this 65 level keenly to see how it responds if it gets there. If it does get there and show signs of weakness, then that would be an opportune time to look for short opportunities in this particular sector. Let's take a quick look at XLP and XLY. So these also have been performing very well, broke out to all new highs this year above around 59. Seems that it looks like it's stalling out a little bit at the top of the range, but for now I would just expect further consolidation until we have a confirmed break and hold of this 60 level here on the XLP and a break and hold to the upside of around 62. Until then, much ado about nothing. Quick look at the XLY with Amazon having the biggest constituent having most recently reported. Again, a bumper year in the XLY. This has been one of the market leading sectors. We have had a nice, well defined uptrend starting in 2019. We have held this uptrend line several times now, and we are within touching distance of all time highs. And so, until this trend line is effectively broken, i.e., the market has chosen its direction, I would be careful here on doing anything unless tactically short term and short in terms of direction on the XLY because of how strong it has been. If you are looking for a short, I would definitely be waiting for a retest, if possible, of this 124.60 as close to as possible of that 124.60. See how price reacts, and then begin to adjust hypotheses and positions accordingly. So that's just a quick look at the sectors of the S&P 500. Let us always aim for asymmetric risk to reward opportunities. Let the market decide, we follow.